Okay, good afternoon once again, members. And it is now 6:15. We would like to begin. Thank you for your patience and welcome to today's session about the roles and responsibilities of credit union statutory committees. Today's session is our final session where we would cover the credit committee. We will have a presentation by Mr. Ivan Thomas. But before we get into that, as is customary with all of our credit union webinars, we would like to start with prayer. Please bow your heads and close your eyes so that we can have a prayer. Lord, make me an instrument of your peace. Where there is hatred, let me sow love. Where there is injury, pardon. Where there is doubt, faith. Where there is despair, hope. Where there is darkness, light. Where there is sadness, joy. O Divine Master, grant that I may not so much seek to be consoled as to console, to be understood as to understand, to be loved as to love. For it is in giving that we receive, it is in pardoning that we are pardoned, and it is in dying that we are born to eternal life. Amen.
Amen.
So before we begin, there are a few workshop guidelines. We would like an engaging session, but we'll also like a respectful session. So please be considerate and mute all microphones to minimize disturbances to the speaker once he is presenting. We also ask that you keep cameras off during the session as it disturbs with the bandwidth and can cause disruption in the webinar. If you have a question, please raise your hand or place it in the chat and we will get to you as soon as possible. Next, we would like to call Ms. Annalisa Arlen Benjamin, the Secretary of the Board of Directors of Tranquility Credit Union, and also the Chair of the Nominations Committee, to bring opening remarks for us this afternoon. Ms. Annalisa.
Good afternoon and welcome on this nice and sultry Friday afternoon. I know it's a tough time, so a special thanks to everyone who turned out, but we just want to make sure this is one of many. We did have roles and responsibilities of board of directors, supervisory committee, and we have the credit committee today. However, once we have the nomination period and we feel you're enticed and we want you to step up, we will be having more sessions on each of these roles, a deeper dive. But this is just to give you all an idea. For those of us who are new, it's been a great refresher for me because I am not ashamed to tell you I could not answer all the questions yesterday. Okay, so we are always, that's one thing in the credit union movement, we are always open to learning, and it's about pooling all our resources, coming together to generate wealth. Of course, the credit committee is the engine room of, I see Roy's there, the engine room of the credit union. We live on loans and we want to know we have good quality loans. It's not about quantity, it's about the quality of loans so that we don't have any delinquency or any other problems. And we also generate wealth and have good saving and spending practices. So thank you so much for tuning in, I should say, this afternoon, and welcome.
All right, thank you, Ms. Arlen Benjamin. Now I'd like to ask the Sales and Marketing Manager, Ms. Carissa Carrington, to help us introduce our speaker. Carissa, are you here?
I'm here. Good afternoon, everyone. Can you all hear me?
Yes, we can hear you.
Yes, we can.
Okay, perfect. I have the honor this afternoon of introducing our esteemed facilitator, Mr. Ivan Thomas. Mr. Ivan Thomas is a seasoned business strategist, corporate trainer, and development coach with over 25 years of multidisciplinary experience spanning finance, cooperative development, education, real estate, manufacturing, automotive, and retail sectors. He is renowned for his pragmatic, solutions-oriented mindset, and he brings a wealth of expertise in organization transformation, strategic planning, credit administration, and business development. He currently serves as the team leader for operations at GBest Consultants, where he directs high-impact consulting teams supporting the Central Finance Facility, that's a cooperative society of Trinidad and Tobago Limited. His responsibilities include strategic advisory services, marketing and business development, stakeholder engagement, credit structuring, financial diagnostics, and investment analysis for both financial and non-financial cooperatives. Mr. Thomas's academic portfolio includes a master's degree in marketing from the Arthur Lupchak Global School of Business and a bachelor's in accountancy and finance from the Heriot-Watt University. He is also a certified train-the-trainer professional and holds credentials in risk management, credit risk management, supervisory leadership in the cooperative sector. Mr. Thomas has held several distinguished leadership positions at SFCCU. He served as chairman of the credit committee, treasurer of the board, president of the board. His facilitation and coaching credentials also include a broad spectrum of training engagements, including operations leadership, strategic planning and business coach for BECU, project coordinator in the OECS Techie Incubator Accelerator Program, and a coordinator of the IDB CFF Eco Micro Green Finance Initiative. Since 2008, Mr. Thomas has actively designed and delivered capacity building workshops for cooperatives. He is highly regarded for his engaging facilitation style and his ability to translate complex concepts into actionable strategies, and his deep understanding of the Caribbean cooperative landscape. Whether supporting frontline staff or guiding executive teams, Mr. Ivan Thomas consistently brings clarity, purpose, and impact to every engagement. It's our pleasure to welcome you here, Mr. Thomas, and we look forward to learning from you.
Thank you very much, Ms. Carrington, for such a wonderful introduction. And good afternoon, ladies and gentlemen. It's a pleasure to be here today to facilitate this training program on the roles and responsibilities of the credit committee. Let me see if I can pull up my presentation. So I trust that we are all seeing the presentation on the screen.
Yes, we can see it.
Yes. No, 1 second. Let me take it down and put it back up again because I did not activate for the video. Okay, great. Right. So let's get started. Right. So roles and responsibilities of the credit committee facilitated by yours truly, team leader operations at the Central Finance Facility. And just to highlight what our agenda will look like today, we'll do a brief program overview. I would like to just share some brief introduction of the CFF and what the CFF is about. We'll have a little icebreaker. And what is very important for this program is keeping our view on the philosophy and history of the credit union movement. Because I think for us to be able to be good practitioners in the movement, we must always keep sight and never lose sight of what the philosophy of the movement is supposed to be. The legal framework of credit unions in Trinidad and Tobago, and what we are here for, the roles, responsibility of the committee, what are the core functions, looked at some of the ethics and areas for conflict of interest. We'll do a recap and then we'll have some Q&A. However, you are free to ask your questions as we go along the presentation as well. So at the end of the program, participants should have a good understanding of the history and philosophy of the credit union movement, an understanding of the legal basis and authority for the credit committee, to be aware of the responsibilities involved in approving and managing member loans, recognize ethical standards and the fiduciary duties of committee members, learn about confidentiality, eligibility, and committee procedures, and be prepared to contribute effectively with confidence if and when elected to serve. So how are we talking so far? Good? We'll give a thumbs up. So about the Central Finance Facility where I currently serve, and it's important for us to know about the Central Finance Facility, being people aspiring to be part of the credit committee, because the Central Finance Facility is what we call the credit union for credit unions. It was established in May 2002 by the leaders of the credit union movement. It is fully owned by the credit union movement. So right now we have 39 credit unions and 2 non-financial cooperatives who are the shareholders of the credit union. So just as you all here are members of Tranquility Credit Union and you own shares, similarly, credit unions are members and owners of the CFF by purchasing shares and being part of the CFF. So back then in 2002, when the idea for the CFF would have come about, it was the leaders at the time saw that there needed to be a vehicle owned by the cooperative movement to act as a financial intermediary for the cooperative sector. So the CFF plays a role similar to what the central bank will play within the banking sector, where we accept deposits from credit unions who have excess liquidity, and then we would lend out those funds to other credit unions who may have the need for liquidity strengthening or working capital needs. For example, credit unions who might want to establish a new headquarters or to build their first headquarters, expand, improve on their physical assets, as well as capital expenditure like ICT, computer systems, and stuff like that, can come to the CFF, borrow monies, and be able to fund their working capital needs. The governance of the Central Finance Facility is structured similar to that of the credit unions as well, where we have our annual AGM, and at our annual AGM, members are elected from amongst our membership to serve on the board and the audit committee. Only difference is that we do not have an elected credit committee. The credit committee functions are done by the management team of the CFF, including myself. All right, so I think it was important for you all to know about the CFF. All right. So let's have a little icebreaker. I've been talking for a while. We heard the secretary, we heard Ms. Carrington. Let's hear from you for a little bit. So let's have a little icebreaker where we're going to introduce ourselves. We're going to tell why we are here today and how long we have been serving at Tranquility, and why do you want to serve on the credit committee. All right. So I will just give a bit about myself with regards to my passion is people development, and I strongly believe in the philosophy of the credit union movement. I would have started my financial career at Police Service Credit Union, where I worked as a loans officer, and then eventually serving my first stint in leadership in the credit union movement would have been as a member of the credit committee at SFCCU Credit Union, and then eventually being chairperson of that committee and serving on the board in different capacities, treasurer, vice president, president, right? So the credit committee, being here to deliver this program today is very near and dear to my heart because, as I said, it takes me way back to when I started in the movement. And I'm glad to be here today to able to impart my experience and my knowledge with you. And I hope that what we take away today will be of benefit for you when you are called upon to serve. So let's get started. Now, I cannot see the screen to call, so I hope that people will volunteer themselves quickly so we could get it going. Any takers?
Good afternoon.
Afternoon.
My name is Nadine. My name is Nadine Otley, and I'm currently serving on the credit committee. This is my third year of service, and I like being on that committee because it gives me a hands-on opportunity to interface with the membership themselves. And in doing so, I am able to listen to the needs of people and allows me the ability to assist with my other team members to best able to help a situation and to better the lives of members.
Thank you very much, Ms. Otley. Who's next?
Good afternoon. My name is Antoinette Charles Honore. I haven't served on any of the committees. I'm just a member of the credit union. My children's a member, and I just wanted to understand all the different roles and responsibility of the different committees. So that's why I signed up.
All right. Very well. Thank you very much, Ms. Honore. Who's next?
Good afternoon, Mr. Thomas and all members on the call. My name is Michelle Duncan. I am a member of the board of directors, and I am here to learn of the roles and responsibilities of the credit committee and to also lend support to the credit union as we seek to educate our members on the roles and responsibilities of the credit committee and to encourage our members to serve. Thank you.
Thank you very much, Ms. Duncan. Anyone else?
Hi,
Good
my name
evening.
is Alana. Hello? Hi, my name is Alana Ramirez. I'm part of the I'm just a member of the credit union. I'm just here to learn about the committee.
Thank you very much, Ms. Ramirez.
Okay.
Hi, good evening, everyone. My name is Royds Williams. I'm presently serving on the credit committee. This is Nadine. I'm looking forward to gathering some new information as it relates to the responsibilities of the credit committee.
Thank you very much, Mr. Williams. Anyone else?
Hi, Mr. Thomas.
Hi.
My name is Shishir Strawn. I am a member of the credit union. I just come on board to just learn more about the credit committee, the rules and their responsibility, and to be educated because they'll give me more insight on what's the rule. Yeah.
All right, thank you very much. Anyone else? All right. Well, great. So we have a mixture of people from who are serving committee members. We have people who are members of the board, and we have ordinary members who are here to get more knowledge and more information about the credit committee, and hopefully that will inspire them to want to nominate themselves to be elected to the committee when your AGM is called. All right. So I want to share a brief video which talks about the history of the credit union. So let's get it started.
Credit unions began as a powerful idea, people helping people. In 19th century Germany, Friedrich Raiffeisen and Franz Schulze-Delitzsch pioneered cooperative lending, giving ordinary citizens access to credit for the first time. The idea spread quickly. Canada saw its first credit union in 1900. By 1909, the movement reached the United States, at its core democratic ownership, community support, and financial inclusion. In Trinidad and Tobago, the credit union journey began in the 1930s. Amid economic hardship, Catholic priests like Father John Peter Sullivan worked with local communities to promote thrift and lending among working people. By 1942, the health sector credit union became one of the first officially registered societies. Throughout the 1950s and 60s, credit unions grew among teachers, police, oil field workers, and farmers. Today, Trinidad and Tobago has one of the highest credit union membership rates in the Caribbean. From offering affordable loans to sponsoring scholarships and community outreach, credit unions remain at the heart of national development. The mission remains clear: empowering people through collective action. Credit unions, then and now, are about building stronger communities, one member at a time. Credit unions began as a powerful idea.
Right. So any thoughts on that video presentation? Anything that stood out? What I like about it is that it brings us back to the roots in terms of why the credit union started. What was the purpose of the credit union? And well, I'll ask the question now. This was in the 18th or the 19th century, 18 somebody. It was 1830 or somewhere around there. And we are in 2025 now. Many years would have passed. Do you think the role of the credit union has changed? That's a question I'm throwing out there. Do you think from when the credit union have started, do you think that the role and purpose of the credit union has changed? And if so, what are if so, why? And if not, why? That's some names here, so I could pull. All right, let's see. Michelle Duncan.
Yes, sir. So one of the things that I got from the video, it was breaking up a bit on my end here, was empowering people. It was about empowering persons, and I do not think that has changed. It still remains as to empowering persons and helping persons to to cultivate wealth.
All right, very good. Ms. Otterly, you have been seem to be a seasoned person in the credit committee or the credit union. What are your thoughts on?
While the core of the credit union hasn't changed, it's people helping people, empowering them. Life has changed. I would say the credit union movement has progressed as we have become more, how will I put it, more global in terms of all the technology. There's a lot of change in that area. And we have had to become a little more stringent in giving out loans because you have to look at people's ability to repay. You have to look at fraud elements. So in terms of the change in society, the credit union movement has changed to keep up with those things. But the core value of it, I can speak for TCU, is still people helping people. Be there to assist our members. But there have been major changes in technology, FIU, etc.
Great. Mr. Williams, what's your take on it?
I think the philosophy remains the same. And while needs may have changed or increased throughout the years, the cooperative philosophy remains, where we are still members, owners, and users of the services offered. People coming together, pooling their resources, and of course, building wealth through the community. So I think 18th century to now, the philosophy remains the same in the credit union.
Great. All right. And what I would add to what all of you have said is that it still remains a grassroots organization built for the working class. All right. And also, the struggles of the working class hasn't changed much. Despite the advancement in terms of our earning capacity from the 18th century, 19th century to now, most things are still very much out of our reach, out of the reach of the average working class person. For example, owning a home, owning a motor vehicle, getting a decent education still remains a challenge for most of the working class. And this is where the philosophy of the credit union need to always stay intact for us to not lose sight that we are here for a purpose to collectively pool our resources for the empowerment of the working class going forward, right? And to keep the working class, but to keep them at a better standard. Now, whether or not that is working is a different debate, but that will be a debate for another time, another occasion. Because like all things, there is the good and then there's the not so good. And maybe sometimes we need to do the introspection and in how we measure the success of a credit union should not always be on the balance sheet in terms of how much dividend we're able to pay or what the surplus is, but how are we impacting the lives of our members? Our members moving from point A to point B, or are we just facilitating their consumerism or their appetite for nice, shiny things, right? So this is something, and I'm glad that we have members of the board who are responsible for setting policies here today, because maybe when you all are preparing for your AGM and you're preparing your board report, maybe one of the metrics to measure the success should include the people development aspect of your stewardship. So that's something that you all could think about. If you all want to add anything to it, we are free. If not, we'll move on. Right. So the legal framework for credit unions the credit union, the first legislation for credit unions that was passed in 1945 called the Credit Union Societies Ordinance Act, and that would have given birth to the first credit union. If you recall in the video, they said the first credit union to be registered in Trinidad and Tobago was the Health Workers Credit Union, what was then associated with the Colonial Hospital, which is now Port of Spain General Hospital, way back in 1945. Over the years, the act would have gone through, well, I was tempted to say several modifications, but I need to change that word. The act would have been updated in 1971, and then there were a couple of amendments in 72. I think 91 probably was the last amendment recorded. From 2011 or thereabout to now, there have been pardon? From 2011 to current, there has been several attempts by different administration to give the act some teeth or to amend the act to reflect on the realities of today. Ms. Otterly would have talked about the changes in landscape in terms of the propensity for fraud and new technologies and all of this, and what would have caused us to have to change our business model, how we evaluate loans and stuff. And the Hope New Act will address some of these issues that are facing the credit union and will allow us to be able to govern our credit union and more robust if with change of government priorities get shifted. So we'll see if this is something that is kept on the agenda. And there have been several consultations over the last 2 years or so by the steering committee. And I trust that Tranquility would have been part of those discussions at some level and would have contributed towards the development of the new Cooperative Act. So right now, until further notice, we are governed by Act 1971, the Corporation Society Act 1971. All right. The role of the credit committee, that is sanctioned within the act, and it is for the credit committee have the sole purpose once you operate in a credit union, and I'll explain what I mean. The credit committee is the sole body for approving loans. In the cooperative sector, there are the non-financial cooperatives and there's the cooperatives. Some of the non-financial cooperatives, they also give loans to their members. In that, for the non-financial cooperatives, their board will usually approve on the loan, but they would not have a credit committee or so. They will have a supervisory committee or equivalent to that, but they're not mandated to have a credit committee. But the act states, once you carry name credit in your name, being credit union in your name, then you fall as a credit committee cooperative or financial cooperative, you must have a credit committee for the approval of the loans. Eligibility and requirements. So individuals aspiring to be members of the credit committee. Now, in some credit unions, based on their bylaws, the board of directors or members from the board of directors may serve on the credit committee. All depends on what your bylaws stipulate. However, no member of the supervisory committee can serve on a credit committee or as your board. The supervisory committee, as you would have learned in the session for the supervisory committee, the supervisory committee is the watchdog of the society. They act as the internal auditor, and they need to maintain that level of independence for them to function effectively. Notwithstanding that a member of the board can be on a credit committee if the bylaws permit, while that member is on the credit committee, he needs to also act independent for the credit committee is also an independent institution and should not be negatively influenced by the board, the supervisory, or any member of the society for that matter. To be elected, to serve in any capacity in any of the elected positions in the credit union, you must be at least of the age 18, and you must be of sound character. You must be in good standing with the credit union, right? And you should have been able to demonstrate over your lifespan the ability to make sound and good decisions and to be at least a good manager of yourself. And so those are some of the basic requirements for being being a a member of the credit committee. And the things that stands out most being over the age of 18, being in good standing with the credit union, and to be of sound mind and judgment. Now, as I said, different credit unions may have more specifics, but those are the general requirements. So the roles and responsibilities of the credit committee. The primary role is approval. They have the authority to approve loans, and according to Chapter 34 of the legislation, the credit committee possesses explicit authority to approve loans, thereby reinforcing its functional role within credit assessment. Right, so the structure of the credit committee is membership based, like the other committees of the society, where members are elected from the floor, and we just spoke about some of the criteria for being elected, and this will differ from credit union to credit union. But again, you must be attain the age of 18, you must be of sound mind, and you must be in good standing with the institution. So the powers or the legal authorities comes within the Act from Regulation 50. And Regulation 50 says, Regulation 50, Section 53 or C, in addition to the board, 2 committees shall be elected annually by members, namely the credit committee for the purpose of granting loans to the members, and the supervisory committee for the purpose of supervising or performing the internal auditing function. So what do you think? I mean, you have people who would have served, who are currently serving. What do you think are some of the core functions that or responsibilities of the committee in terms of how do we go about doing what we are supposed to be doing, which is approving loans? So, Ms. Honore, you haven't had the opportunity to serve on the credit union as yet, but what do you think are some of those responsibilities or that will be vested with the credit committee while carrying out their duties? Anyone else want to take the question?
Good afternoon.
Afternoon.
Mr. Jacobs, yes. Director.
Pardon?
A director on the organization.
Okay.
The more important aspect to be able to function, on the credit committee you have to be able to understand the credit portfolio, so you will be more or less be effective in handling the needs of your members, which is the main aspect of the credit committee and the credit committee members. Those are, from my perspective, two important aspects: knowing the portfolio, understanding the functions and goings of the management of the loans, and being able to facilitate the needs, understanding the needs, and interact with the members, basically.
All right. Very good. Very good. Anybody else?
I think a key function on being the committee is that you need to understand the 7 C's of credit. You need to understand the person has capacity to repay. You need to understand if their character is in line. And those are just 2 of them I'm speaking about. But it's important on the credit committee to assess a person's financial ability, and then not only just get the loan, but to be able to comfortably pay that loan so that they can live. And one of the main functions you need to is to be able to assist a member, especially a member who is in a lot of debt, to have a plan to help them to come out from that debt, to be a member that is growing, a member who can now begin to save, and not just a recycling of debt, and loans.
Right. Very, very good. All right. So one of the main functions is loan evaluation. And as Miss Otterly would have mentioned there, the 7 C's of credit. And this is your tools that you will use in terms of evaluating the loans. So for those people who are new to the credit committee, those are some tools that we use in credit evaluation. We have the capacity, we have character, we have condition, we have collateral. The other 3 C's seem to be slipping me right now. I guess it's a reflection of my age. But I guess when we come back into the other sessions later on, we will be able to go into those into more in depth. But those are some of the tools that we have as credit analysts to look at to determine whether or not someone has the capacity to take on loan. So now, one of the other important things that I didn't hear come up from the 2 speakers is in terms of your credit policy, right? Because the credit policy is your backbone, and that is what is going to influence how it is that loans are granted. So you must have an in-depth knowledge of your credit policy, as well as the portfolio of the different products that the credit union has to offer, right? Because the policy is what is going to govern how the credit committee operates. The policy as well as your bylaws. Well, your policy would be a reflection in some part of your bylaws, because the policy cannot trump the bylaws, right? So the bylaws would dictate or stipulate some of your lending criteria, but the loan policy will go more intricate or be more in-depth as to how the whole thing's supposed to operate. So the credit committee plays a pivotal role in scrutinizing on application, assessing the feasibility and the associated risk. We heard risk mentioned a couple times for the day so far. And let's look at risk from the credit union and the credit committee. And again, looking at the importance of the credit committee. The secretary, when she addressed us at the opening, she spoke about the importance of loans to the credit union. Loans is the major provider of income for the credit union. So just to bring that into perspective, the credit union and some of the other speakers spoke about the operating costs of the credit union. The credit union operate, we have staff to pay, we have to keep the building looking nice and fancy, and you know, and to project a modern and stable environment that the credit union is operating within. We have to invest in new technology. So all of this comes at a cost. How credit unions earn money, the majority of the income is earned from the interest earned from loans. So the credit committee have the credit unions is in the business. I don't like to use the word business, but it's the business of giving loans to its members. And this is how the credit union earns its income, to be able to pay dividends as well. So we must give loan, but as the secretary mentioned, we must give good loan. So credit evaluation skills must be on point in terms of being able to evaluate the member, to assess the risk of this member either defaulting or paying on time. And it's simple as that. There may be some gray in between, but it's either the member could pay the loan or the member cannot pay the loan. Or as one of the C's in the 7 C's is character, does the character of this member is one that we have the confidence that he's a trustworthy individual and that she would repay her loan if the loan is granted to her. So we're looking at their income, we're looking at their expenditure, we're looking at how often they travel, their lifestyle, their shopping and stuff like that. And we need to be able to determine whether or not this member is a member that we should extend credit to. So that's the loan evaluation part of it. And the credit committee will meet, most credit unions now, because of the volume of loans, have to meet on a weekly basis to assess the loans and stuff like that. All right. It's important to also look at the structure of the credit union, because the credit unions, especially in the smaller credit unions where the staffing may not be as robust as in Tranquility, some of these functions in terms of the actual disbursements and loans and stuff like that may be handled by committee members or other elected officers. At Tranquility, we have very competent and capable staff in place. So some of the responsibilities of the credit committee may have been may be delegated to the general manager, the loans officers, the credit supervisor, credit manager and stuff, in terms of having a limited amount of approval authority. But nonetheless, the credit committee still needs to be mindful and watchful of those loans, because they are the authority for approving loans. So somewhere along the line, the credit committee signature should show up on those applications. But again, the different credit unions, based on policies and stuff, it may differ slightly. But overall, the credit committee has the responsibilities for the approval of the loan or the granting of loan. Right. So members will borrow loans, and sometimes the loan is outside of the shares and savings of the individual member. So they may require to provide additional securities for the loan. They may act as a guarantor for the loan, or they may have a guarantor acting on behalf of them for the loan. The credit committee responsibility is to assess the collateral or to assess the need for collateral and make necessary recommendations to the management team or to the members to say, okay, you need to have X amount of additional collateral for the loan. And again, in collaboration with the supervisory committee, because they will also have a function to ensure that all securities pledged for loans and stuff is properly perfected and and in proper order. Likewise, the credit committee also have that responsibility to ensure then that if we are granting the loans, that the all the box are ticked off in terms of making sure that the collateral is properly perfected and everything is in order. So when the credit committee meets on its regular basis, at some point in time, the credit committee should be setting aside time to check back on these things to ensure then that the compliance part of it is also up to standard. Yes, the supervisory committee has that responsibility as well, but as the approval body, you also need to keep management aware that you all are checking back on these things. Someone talked about it, about the over indebtedness of members. In terms of some members, they are highly indebted and they're still coming for loans. The credit committee must also act as a financial advisor to members, advising members on the prudent management of their finances. Not because the member wants a loan, it means that the member always have to get the loans. And I think if we go back a little bit to the philosophy, sometimes, and this is my opinion, but I feel sometimes the credit union movement, we are so focused upon the surplus. And in order to get the surplus, we need to give loans that sometimes we really, and I'm looking for the right words, but sometimes we behave just like the loan sharks outside there, in that we saddle our members with unnecessary debt, that the members are unable to adequately service. But because we want to push the bottom line, and there's only a finite number of members that are either in the credit union or who would qualify for the loans, we saddle them with a lot of loans that some of them really cannot manage, especially in the long term. And what we see happening, when the member maxes out his debt servicing ratio or his DSR, and he's up, I mean, I remember in my early days in terms of credit training, there was a scale that was used in terms of what is acceptable DSR. If you look at, for those who are familiar with the banks, the banking, or let's say for mortgages, the DSR must be with the mortgage must not exceed 30%. They will give another 10%, carry up to 40%, to get a loan to probably purchase a vehicle or to furnish your house, whatnot and stuff. But anything over 40%, the bank will not touch. All right? Now, the credit union, on the other hand, and maybe because we want to be a people-oriented organization, we don't want to be as rigid as the bank. We want to help our member, because sometimes the member, based on their circumstance, may really need to get this financing as well. And we're able to go up to over the 40, 45, 50, 55. But when it starts to cross over 55 and half of the person's income is allocated towards debt servicing, we will not be doing the member any favors by putting on more debt onto his plate. Right? And what happens now is that the member, when he reaches that point, the 55, the 60, the 70, he goes to the bank. The bank will give him a consolidation based on his circumstances. So you will bring a check to the credit union, use whatever shares and savings that he have there, clear it off, and goes to the bank with a clean sheet, because he consolidates now. So now his debt servicing ratio has come back into the 40%, but now he has liquidated all his shares, all his savings, whatnot, and most of the time, the most amount of savings the average working class person has and I'm using that word deliberately because you have to remember who our market is within the credit union itself. So when the member liquidates all that savings and stuff like that, he now has that hard task of rebuilding his savings again. And we all know it is very difficult to start over from ground zero and get back to where you were. And even when you get back to where you were, you still lose all that you would have put in before. So the credit committee has a role in terms of counseling its members and providing that financial counseling at times. Coming back to the loan policy, as I mentioned earlier, sometimes the member, he already at his max, but based on the circumstances, the member may need to have a hearing. In that, the member fell ill, or he had some emergency. When the hurricane season, strong winds came, blew off his roof. He just took a loan a couple months back to purchase the car to send the child to university. His roof is blown off. Do you think that the credit committee has a responsibility there now to meet the member somewhere in the middle where he is now in what you call a particular circumstance that he needs to get in? So quickly, let me just say one or two responses. Yes, no.
Of course.
All right.
You have to try to remember, he's in a dire situation, but you have to help and mitigate the risks for the credit
All right.
union.
And how would you, what are some of the measures that you will put in place to mitigate such a risk?
For one, probably put a ban on taking loans for the next 2 years. May also put another measure where we hold shares or we hold some collateral, what a car or whatever. If it's something that we can hold to, we hold on to that. 2 examples.
All right. Very
And we also a Kuna protector plan where we cover the loan as well. So those are like 3 measures we look at and sometimes more.
right. All right. And one of the things too, I remember when I was serving on the credit committee, when members come for loans, and we're talking about in, let's say, about 2000 and 3005, somewhere around there, $100 was plenty at that point in time. And if members, they're saving $100 a month, but they're coming for a loan $20,000, $30,000. And my colleagues and I, we found that if you're coming and you're taking that amount of loan, you should be willing to save more towards your shares. So one of the roles of the credit committee as part of your counseling is to encourage your members to contribute more towards their shares, because that is what is going to save them down the road when a real incident or circumstances or situation in their life comes up. Child need to go to university, somebody gets sick, they need to get surgery or something like that. Is building their share capacity and their savings within the credit union is what is going to save them down the road. So we always, as a credit committee, we should be focusing on encouraging the members to contribute more towards their saving and less towards unnecessary consumerism. Now, a very other important aspect in credit administration and credit committee functioning is ethics, right? So what are your thoughts with regards to ethics, and how do you see ethics playing a role within the credit committee? Ms. Ramirez?
Hello? Hi.
Yes.
Hi. Could you repeat the question again? I just stepped away.
Okay. So I'm saying in terms of ethical conduct and confidentiality, how do you see that, the importance of that for someone who is aspiring or serving on the credit committee?
It will be very important. And you're talking about conduct and behavior and confidentiality.
Yes.
Oh, it's very important because they will want to know that if a situation arises, that the person come to you, the customer come to you, information would not be shared with staff, with probably outsiders, or it must be kept confidential, very confidential. And
Alright.
also and behavior patterns, well, how to address this? I think in anything you do, in your job, you must have a positive attitude towards members or staff. You must be positive in what you're doing. You must be very, very, how to put it, responsible. And so forth.
All right. Thank you very much. All right. So the credit committee must operate with the highest level of ethical behavior and confidentiality, right? The importance of confidentiality, and this is mentioned in the act, right? And it says, Regulation 36.5, the confidentiality of all loan deliberation is paramount, preserving trust among members and ensuring transparency, throughout the process. Matter of fact, this is one of the few instances that the Act speaks about where a member could be expelled from the credit union or to be asked to step down from the credit committee. So, and let's look at it now. Most credit unions would have started as an employee-based organization, and as a result of that, there's going to be a lot of familiarity and stuff like that taking place. So John came for a loan on the credit committee, and Mary, who sits on the credit committee, she goes back and tell the whole staff John's business. How do you think that is going to play out for John? All right. So we have to be very confidential and maintain that high level of confidentiality when we are deliberating on our loans, because we do not want to erode the trust of our members and people financial business in all financial institutions is always treated with the highest level of confidentiality. So that is something that we always need to keep in mind.
So what about a crisis whereas you go to the you go into the bank, into the credit union, and you see your neighbor, and you and your neighbor don't agree, but she's working in the credit union. And the transaction you made with her, and she he or her, they end up taking that information and sharing it outside with the other neighbors. How would you deal with that?
Well, it falls under the same jurisdiction, if we want to call it that, because again, employees supposed to sign a code of conduct, or code of secrecy, and they are not supposed to divulge financial information to any third party unless it is called upon by a court of law or some other jurisdiction that empowers them to do that. In a case like that, well, the management or the board together with the management, will have to basically deal with that once a complaint is made and there's sufficient evidence to support that this is the person that would have leaked the information, then
Yeah.
it will call for some level of disciplinary action taking place.
So they don't have before they join in the credit union or in being an employer, they don't have a contract to sign,
Yes, that's
confidentiality
what I said.
control.
Yes, they have a
Oh,
confidentiality clause, a code of ethics and confidentiality clause. Well, they're supposed to, right? And I trust that Tranquility, being a seasoned campaigner, would have such policies in their HR.
okay then.
Right? Conflict of interest protocols, right? And again, and this is another area or example of ethics and ethical standard. Member must declare their interests. For example, you're sitting on the credit committee, your brother, your husband, your sister, some close relative applying for a loan. It is rightful thing for you to recuse yourself. If you are the applicant, it's the rightful thing that you recuse yourself. Matter of fact, the Act speaks about elected officers applying for a loan, and that loan supposed to be it's supposed to be deliberated on or approved by a joint committee comprising of the different elected officers, the credit committee, the supervisory, and the board, and that person need to recuse themselves. With respect to if they are also guaranteeing a loan, the same applies, right? But in carrying about your duties, you must always, again, act in the most ethical manner and be able to identify when a conflict of interest or a potential conflict of interest may arise, and to be able to act professionally and when those things happen. Now, different credit unions, based on their bylaws, may have slightly different variation to what I'm saying, but again, you need to, once you have the hint that this may be a conflict or perceived as a conflict of interest, you should declare it and you should do the right thing or seek advice from the board or the manager or whoever that is competent enough to give advice as to when to recuse yourself from a certain situation. Right, so the consequences of misconduct: maintaining rigorous and ethical frameworks is essential, and violation can lead to expulsion or removal from the committee. Right? And we talked about the breach of confidentiality earlier on. That is one of the instances where you can be expelled. And I guess the credit union, based on their bylaws and stuff, will have other rules and stuff that will get you to be removed from the credit committee, right? And we always must remember, in terms of exercising our fiduciary responsibility to the organization, in that when we are granting loans, we have to grant loans based on fairness and equality. We know the member cannot afford it over because we and the members are friends or have a good relationship. We want to give the member the loan still at the detriment of the organization. When the credit union gets itself in difficulties out of delinquency, right? That is when the credit union starts to suffer. And far too often, when you analyze why loans are delinquent, it's not necessarily because of the member inability to repay. That might be the underlying factor, but the loan should not have been granted in the first place, and some sort of compromise would have taken place to give that member a loan, knowing fully well that the member wasn't in a dire situation as we described earlier, but because of unethical practices. So we don't want that to happen at all. As a credit committee, we must be responsible, and we must always remember that the welfare of the society is paramount over any one particular member. All right.
Good afternoon.
Afternoon.
Hi, this is Antoinette. I'm just wondering, if you have loans already, does that prevent you anyway from becoming an officer on the credit committee?
The only way that will prevent is if your loans are not up to date. And that's what I meant when I said that you must be a member in good standing, in that you mustn't be in arrears or to be considered as being delinquent. Right? Now remember, again, looking at the philosophy of the credit union, the all members share equal rights, in that whether you are a serving member or you're not serving member, you are still entitled to all the benefits of joining the credit union. However, for transparency, when elected officers are applying for a loan, it goes through a higher level of scrutiny than the ordinary member. But it doesn't bar the officer once they qualify for the loan, and the assessment for qualification should be the same criteria that an ordinary member will need to go through in terms of being able to demonstrate that they have the character, they have the ability to repay, and the loan is being used for the right, for a purpose that is within the policies and guidelines of the credit union. Is that clear? All right. So, right. So we're coming to the winding up. So, I know you've been asking questions along the way, but this is really Q&A segment. So if you have any other questions or so that you want to bring up, that you want to ask or want to engage in any discussions on what was discussed, now is the time. All right. So we looked at the legal framework for the credit union. We look at what gives the credit committee the powers based on the act. We look at some of the core responsibilities of the credit union, and those responsibilities with regards to evaluating and approving loans. One of the things that I can't recall if I mentioned it, but also you and Ms. Otto would have said that in the past, being the let's say the face that interfaces with the membership on a regular basis, you all are the pulse to know what the membership thoughts are and desires are, and you all have a good in a good position where you cannot make policies because that is left for the board, but you can advise the board on policies that you feel might be beneficial to the credit union based on your interaction and that insight that you are getting interface with the members on a regular basis. You all could help to shape the policy, the decision of the board by making recommendations to the board as to what it is that you see fit. Now, for those who are not serving on the committee, and I'm not sure how regularly Tranquility Committee meets, but what you may want to, and probably Ms. Ottilie could give some insight into that, into terms of how regularly credit committee meets, because if you are putting up yourself to serve, you have to remember that this will require some of your personal time. It's a volunteer position. I'm not sure if any remuneration comes with it, but you have to be willing to have the time to put it into it and to be to be dedicated enough to get the job done. So I don't know if Ms. Ottilie or one of the other serving credit committee members will want to say a little bit about how regular you all meet and what the kind of time that is needed to be committed to for the position.
Is going to meet once a week online. Sometimes we're going to meet twice through the week. and have in-person interviews as well with members. But when we meet, sometimes the loan requirements or the requests are so intricate that sometimes we meet at 8 in the night online, and sometimes 10:30 is still going at it. It takes a lot, but because if you have a love for it, a love for serving, and a love for helping members, you do it. And then you come and we need once a month to sign up all loans. You go through all loans for the particular month, meet in person, because as Mr. Thomas was saying, all forms should have our signature for approval. So we meet as a caucus once a month in person, and if we have interviews, we also meet during the month. So you can prepare yourself for a lot of commitment, but it's always in the interest of the member. Royce, I don't know if you want to add anything at this point.
Thanks, Nadine, for putting me on the spot. I think one of the important factors for members interesting to serve on the committee is the time management. You must have the time because people are willing, but they do not have the time. And as Nadine said, when called upon to meet or to commit, some people find it challenging, and for good reason, and we can't complain with those things. Some of family members, work related, and that kind of thing. So one of the important things to make sure is that you have the time to serve and to give. You're willing to, because it's a volunteer situation. So you must be honest with yourself that you have the time to volunteer your service, your skill, and everything that is needed to allow the credit union to grow, and that members would enjoy the fruits. So yeah, and that's basically it for me.
Thank you very much. And one of the things that I didn't touch on earlier on is in terms of the credit committee role with regards to recoveries as well. And the credit committee should take an active role in terms of recoveries, and that will also fall into part of your counseling duties, where from time to time you should be looking, and someone had mentioned in terms of knowing the portfolio, in terms of looking back at the portfolio, looking at the loans that you would have granted over the period of time, and see if how those loans are performing. Loans that are not performing well, you all should try to have an audience with the member to ascertain what is the reasons that the person is not willing to, is not able, is why the person is not paying, and to try to work out some sort of strategy to get the person paying again. If it means that sometimes the loan needs to be refinanced or the terms and conditions need to be adjusted, but that should also be one of the responsibilities of the credit union, and one that the credit committee needs to take quite seriously as well. Now, I know some Trinidadians, we have the tendency to pass the buck, and we will say, well, okay, we have a manager, we have a recoveries officer, and I will say from my experience especially working now at the CFF, where I have the opportunity to interface with a lot of credit unions, providing them with strategic guidance and so. And even my experience at SFCC when I was on the credit committee and treasurer and all of that, recoveries is not a nice thing in credit unions. I don't think that credit union staff are too nice for recoveries. And what I mean by that is that, the credit union is a nice homely place. You come and everybody, all nice and smiles and talking. So when that same person now is delinquent, do we have the, what is the character within us to not necessarily turn a monster, but to be stern with that person and to get that person to want to pay? Most of the times we do not have it. And when you look at, from my experience looking at the recoveries actions in most credit unions and stuff, we do it because it's part of the process, but we doesn't do it with that level of intensity that if you would have, that same delinquent person would have borrowed from the bank or borrowed from an island finance or borrowed from a court where they call in your phone 6 o'clock in the morning, 7 o'clock in the morning, whatever, over the day or the night. We don't have that type of killer instinct in us. And if the credit committee is not policing the recoveries effort, ensuring that the manager and his team keeps abreast with the recoveries, you can have a problem on your hand where delinquency gets out of control, right? It may not be happening at Tranquility, but I have seen it happen in many other institutions because we don't have that, what it takes in us to really police delinquency. So I don't know if you all have any thoughts on that. All right, let me put it this way. Do you all see the credit committee playing a role in managing the delinquency of the organization?
Yeah, it's an area that we need to improve in, and we are working on that. Presently, we have an officer who deals directly with that, and that has been helpful. Tranquility in the past has been a sweet bread, people delinquent and the normal thing, and because because most of us walk the corridors of NP, you see it, and I mean, but I think in the last few years that has changed, and we are taking a more serious approach to recovering and encouraging delinquent members to commit to their initial commitment to the society. So yes, the credit union is not our strongest area, but we are working on improving it. So going forward, yeah, I think things are looking up for us in that area. Yeah.
Thanks very much for that. So I wasn't totally wrong, right? But I'm glad to know that you are taking steps and taking initiative. And I said the credit committee, along with the board, along with the supervisory committee, but the credit committee, most importantly, you all need to be looking at your portfolio, looking at the loans granted, looking at the early, and the best time to get this thing is when they're in the early stages. When they cross the 90 days, the 91 days, it becomes much more difficult to bring it back in. So every month, you all need to look at the listing, identify those people, get these. Once the staff know that somebody, the recovery staff knows that somebody is looking at it, they will go at it more with a little more vigor, hopefully, and then respond. Well, we have some board of directors here. So the directors and all need to set the KPIs for the management team, and one of their KPIs must be in terms of the management of delinquency. And I'm saying this, I'm quite passionate about it because from where I sit, working with different credit unions and the credit unions that we are working with that are in problems, the problem is with delinquency. And delinquency would have reached a stage where it is because of that relaxed sort of attitude towards it. So you don't want to fall into that category at all. So delinquency must be paramount for the survival of the credit union. And just to show how it affects, you give out the loan portfolio is supposed to generate $100 for the month. Out of that $100, you need to pay your staff, pay all your bills and stuff like that. And they say that coming up to $60. So you're making 40% in your surplus. The delinquency reach a point here now that you're getting 90 or 80 dollars out of that 100. You see how it's going to affect, because now it means to say then that you are going to have some challenges in terms of being able to meet all your commitments. And if that continues to persist, then you're going to be in some serious problems somewhere. So don't take that lightly at all. Sometimes it's easy to get misled looking at the balance sheet and watching how strong the balance sheet is and not realizing how it is being eaten away by delinquency. Delinquency is the cancer that kills credit union. I've seen Miss Nadine has a hand up.
Mr. Thomas,
Yes.
a pet peeve of mine, and I raised it in our committee, and our secretary has been actually taking notes of members who we know are bordering on delinquency or maybe heading towards that. You understand? Members who have high PSR ratings, we have actively begun to start taking notes so that we can monitor that member or it reaches a delinquency stage. So we've been a little more proactive.
Yes, and that is I'm glad you mentioned that word because I had it in one of my earlier when I was doing my slides earlier on. Proactive. The credit committee must be proactive, and that is one of the instances where you could be proactive, where you have a watch list. Matter of fact, it comes like just like when the you are preparing for the auditors and you have to do your ECL calculation, and now you have to rate the loans them based on risk. And you all need to do we need to do a similar thing before we reach at that stage in terms of looking at the portfolio. And this is where we could come back into knowing the portfolio and those loans that are at risk. And if those loans are at risk, we need to flag those loans so that at the end of each month, we monitor and ensure then that those loans are being serviced, right? And then even in terms of when those same members come back for loans again, how are we going to treat with them? How are we going to counsel them so that they do not become their own worst enemy? Right? So again, to wrap up, the credit union depends upon loans as its main source of income. The credit committee is the gatekeeper of the credit union's money because the credit committee says how much money goes out. And when you look at the credit union portfolio, what is the size of Tranquility loan portfolio right now? That's a ballpark figure. Don't have to be accurate. Anyone? All right. But the loans is the largest single asset.
Sorry about that,
any...
Mr. Thomas. It's about 88 million.
Right. So $88 million, right? And what is the size of what's your total asset, please?
About 165.
165. So all right. So roughly your loan portfolio is roughly almost about 50% of your total assets, right? And that is significant, right? It's significant. It's still a room to grow, but it's significant, right? And imagine if that is compromised, then what effect it will have on the credit union. And I want you all to really think about that, yeah? Think about that. That $88 million being compromised in a negative way, what effect it will have on the credit union in the long run. All right? So the loans is the most important or single largest and most important asset and area of the credit union. That's the business of the credit union. So therefore, we must, as Ms. utterly talked about utilizing the 7 C's of credit. We must utilize that when we're doing our evaluations. We must evaluate our loans and stuff properly and ensure that we are granting the loans to the right people in the right amount. All right. So went over a little. So I would want to, if you all do have any further questions and so, because I'm not in a hurry to go anywhere, I'm home, but so I'm glad to take any other questions, but I mean, we have to respect other people's time as well. But if you all want to have any questions, I'll be more than happy to assist with
Mr.
answering.
Thomas, how long should you be a member to join the committee?
Right? Pardon?
How long should you be a member of the credit union to
Could you
join
just
the
repeat that in
committee?
here properly?
How long should you be a member
Yes.
to join the
Well,
committee?
probably one of the directors could probably ask that if they don't have it, if it's a stipulation in their bylaws. But generally
Yeah.
speaking, I don't think that the time span is covered under the act. Once you are a member and you're a member in good standing, you're a member over the age of 18, that that should be the main criteria for joining. Of course, the longer you are as a member, then you have more ties to the organization, so to speak. You might be more familiar with the rules governing the organization, so it might allow you to function more effectively as a credit committee member. But I'm subject to correction, but I don't think that there's any time stipulated, and maybe one of the directors or some of the other members might be better poised to lend some clarity.
Okay, thank you. Okay, thank you.
You are correct, Mr. Thomas. You have just identified the criteria for serving as an elected officer on one of the statutory committees. So what Ms. Ramirez could do, she can also look out for when nominations are actually open, and we invite you to fill out your nomination papers and be guided by the guidelines that will be presented. And then you attend the AGM, and it's a democratic process.
Okay, then, thank you.
You're most welcome.
Thank you. So
We do have one more question in the
yeah, go ahead.
From the
Go
chat.
ahead. I just take it on this. I'll put down. I want to put this, what you call it, evaluation link in the chat so that people could put it up. But go ahead with the.
All right, good. So we have a question from the chat. Mr. Hughes is asking, what should members do if they end up delinquent? And if you have any recommendations for delinquent members. Mr. Thomas, are you still there? Mr. Thomas seems to be having some connection difficulties.
Right, I'm back on.
All right, good. So we had a question in the chat asking what should members do if they end up in a delinquency status, and if you have any recommendations for delinquent members.
For, let's say, the most of that 2 years. So I could not have serviced my loan to the best of my ability. I would have contacted the credit union. We made an arrangement. We had to restructure the loan, whatnot and stuff. And until it got back in. So there are circumstances that will happen. Someone get laid off from their job. All of these things could happen. They get sick, right? But your your duty as a member is to contact the credit union and to work out some sort of a plan in terms of how you're going to correct the delinquency.
Thank you for that, Mr. Thomas. We will take one more question before we close today. Anybody has one more question for Mr. Thomas? Okay, it seems like your information was well received. So no more questions at the moment. So is Miss Carrington online to deliver the vote of thanks for us?
Yes, just before Ms. Carrington, yes, I would have put the link for the evaluation and feedback form in the chat. So you all
We're not
could,
seeing it, Mr.
you're not
Thomas.
seeing it? All right, let me
No.
see. Probably that's when I got cut off as well, so it probably didn't go through.
All right.
So I'm putting it
Okay,
back. Let me know
now.
if you're seeing it now.
Right, we now get it.
Right. So if you all could be kind enough to pull out the evaluation, so I will see how well we did with, how well I did with this session and where there's room for improvement.
Just a note, Mr. Thomas, the Google form asking for permissions. So you need to
Alright.
adjust it on your end before we could answer.
Okay. Let me see if I could do that right away.
Should be right at the top right-hand corner by settings. All right, it's open now.
Great.
Yes, so members, please fill out this Google form about the session this afternoon, and let's help Mr. Thomas gather some information as to how he can improve himself. Although we know that he did an excellent job today, there's always room for improvement. So please let's assist him as best as possible. And Ms. Carrington, you can take over now.
Thank you, Christine. Good night again, everyone.
Good night.
So I want to thank each and every one of you for tuning in to tonight's session. I know today is Friday. You could have been anywhere else in the world, but you are here with us, and we are indeed grateful. Thank you to the nominations committee and the chair, Miss Annalisa Allen Benjamin, for her vision and foresight in making this possible. My daughter, sorry about that. Also, thank you to Mr. Thomas for responding to our call and, providing such needed information this afternoon. The session was indeed insightful. We learned a lot. We appreciated your style, your candor, where you engaged everyone here tonight and were so invested in even getting to know us as people and who we are. We thank you to our members for their interest to serve, our directors who are here on the call, our officers who are also on the call who supported this afternoon's initiative. We thank you, and we urge you to encourage your fellow colleagues and members who would be interested in serving when this next nomination notice does come out. The sessions have been recorded, so we will also share for those who may have missed it. Please encourage them to also tune in and get the information as to what it takes. One thing I learned tonight, and I thank Mr. Williams, Royd Williams, who is the chair of our credit committee, for that contribution in terms of the time. It's really a labor of love, and you need to have the time to dedicate to this level of service. So in closing, I just want to say thank you all. And of course, thank you to our moderator and my staff, Miss Christine Richards, for doing such a wonderful job tonight. Thank you very much to everyone. I wish you all a very blessed night, and we look forward to your participation at future webinars. Have a great night, everyone. God bless.
Same to you all.
Good night, everyone.
Good night.
Good night, all. Yeah.